Well, hello, folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, let's pull up the screen. On Nio, we've got our February numbers coming out here in the next 24 to 48 hours. But the big question is, Houston, do we have a problem?
Say again, please?
Houston, we have a problem.
Yeah, that's the concern. Do we have a problem? Let's talk about it a little bit. Now, we've got this big problem in Europe right now. We've got Ukraine getting attacked by Russia, and that's actually appears to be going pretty well for the Ukrainians. The world is sort of turning on Russia right now. Putin is not a popular guy, to say the least. My thinking, and I think a lot of people thought this, and it was my big concern a few days ago, was they would just swoop right on in there, do what they need to do, put in a new government, and then negotiate out with the West and go on. And that's not what's happening. It feels like a disaster for Russia. It's a disaster for Ukraine too, because they obviously didn't want this, but it's really making Russia a bit of a pariah. And I don't mean the Russian people, I mean the leaders of Russia. And the other issue, and the thing that could affect Nio and all Chinese stocks and every stock in the world, was if China saw, hey, Russia just swept right in there, took over Ukraine, made it part of Russia again, sort of. Well, what if China did that with Taiwan? Well, now I think China's probably seeing this and going, do we really want to be that? You know, do we want to be the next Russia? I kind of doubt it. A few days ago, I was very concerned, but now that I've seen how Russia and Ukraine thing has kind of played out, I'm not as concerned, because I don't think they're going to want to do that. Because let's understand why Taiwan is so important. And it's right here. 90% of advanced chips are made in Taiwan. Again, that's 90% of chips are made in Taiwan. All right, so if 90% of the most advanced chips are made in Taiwan, what does that mean? Well, if that got taken over, that's going to make every stock market just go into, it wouldn't be good. It would be bad for every company out there that uses a chip. And let's understand, it's not just car companies. Virtually everything's got a chip in it. So, you know, you're talking about phones, you're talking about electronics, you're talking about sound. I cannot think of anything that doesn't have in it except maybe soft drinks. And they probably use chips on some level. So obviously that's would not be good for, we were just talking about Nio right now. That would not be good for Nio. And I think that's what's been holding down this stock in the last few days. Because if you look at this chart, you know, a lot of things rebounded the last few days of, you know, the market being open. Nio did not. It's pulled all the way down to 21 bucks, down to this lowest support. And I don't know if it's going to break through this or not. It might. You know, it's hard to say. I feel better about the Taiwan situation now than I did a few days ago. So we'll see how that plays out. But we do have deliveries coming out very soon for February. And let's take a look at deliveries. And as you can see, you know, it came down a little bit in January, which is not unexpected. Normally the first quarter is very low for automobiles. So a little bit lower than December is not a surprise. We did have that horrible October, but they were back working on the ET7 line, and they had to kind of rework their line over at JAC so that they could double the ability to produce vehicles. February, let's understand, February is probably going to stink, because not only is it 3 days less or 2 days less, depending on the month, but also the Chinese New Year wipes out an entire week. And it's really a government holiday that pretty much everybody has to take. So I would expect the numbers to be quite low. So I'm thinking for February, we're probably looking at about 7,000, somewhere in that neighborhood. I would think 3/4 of January would be a good guess. So 7,000 is probably about right. Call it 6 to 8 if it makes you feel better. But we may be in for a bit of a hassle here for the next little bit as this Ukraine thing plays out. The numbers probably aren't going to be great for February, so we may stay down in this area. If it does drop down in here, because I do feel a little bit better about the Taiwan situation, I might pick up some more in dollar cost average into my swing trade. And I have been swing trading this thing. I do have a long position that I'm not going to touch. It's a 5-year hold at least. But my swing trade, I've been, I traded it here, made some money, traded here, made some money. And I've been buying under this support of $34. And my last 3 buys, I dollar cost average is 24, 22, and 20. If it does drop below 20, let's say it goes down to 18 or 16, I'll dollar cost average some more on that swing trade and wait for it to go back up. I do expect the ET7 to be quite positive for Nio. And here are some pictures of the ET7 if you haven't seen it. They've got a great little video on their website. But this vehicle's, I think, going to be their flagship and probably going to be one of their more profitable products they're going to have over the years. And as you can see, it's pretty cool. And understand, sedans are the #1 selling vehicle in China, and they don't have a sedan right now. All theirs are SUVs. And they also have the ET5 coming out, which is a smaller version of the ET7, less expensive, and I believe it's coming out in September. This ET7's coming out in late March. So I expect we'll have some nice deliveries out of that, and that should give a nice pop to the stock in late March. One of the big issues is, when will Nio be profitable? They could be profitable right now if they wanted to be, but there are two reasons why they're not. And understand, in the first quarter of 2021, they were pretty close. On over $1 billion in sales, they only lost about $40 million. But what they've been doing is they've been increasing their general administrative, which are the Nio houses and things like that, and building up the support they're going to need to be a large company. So as you can see, they've gone from $182 million to $283 million in their G&A. And in their research and development, they've done the same thing. They've gone from $104 million to $185 million over the last few quarters. So that's not a bit of a surprise at all that they would be a little bit less profitable. But understand, this company's in hyper-growth mode, and they expect to be really big one day. And right now, they're only selling in China. Well, wait until they're in Europe and the United States and all over the world. And understand, their factories are going to be in China. Well, when you produce in China, your raw materials are lower, your payroll's lower, everything's lower, and it makes the company more profitable. So that's one of the reasons I like Nio long term. It's usually a bad bet to bet against China when it comes to manufacturing. I mean, that's just, whether you like that or not, that's the reality. They know how to build things, and they know how to do it in a very inexpensive way and still provide a good quality product, which obviously Nio is. And that's Nio today. And a couple of days ago, I thought we may have a real problem, but right now I'm feeling a little bit better about it, especially with how things are going in Ukraine. And if you like this content, be sure to hit that like button. Lets me know to continue to cover Nio. And if you haven't subscribed, hit that subscribe button. Give the channel a chance. I'd certainly appreciate it. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.